my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your weekly technical analysis of LME 3-month lead and tin. I'll start with LME 3-month lead. Back before my annual leave, I had noted that lead was the only one of the 4 metals that I cover on my weekly charts to not have a weekly key reversal down. And that was 5 weeks ago. Hence, I paid lead some special attention at the time to see what makes it different. Even now, the first thing you can see is how comforting it is to see once again the market still keeping within the May to October 2020 bullish shift pitchfork. This time moving up from the support of the big old 50% Fibonacci line of the February 2018 to March 2020 move at 21.27 through the middle time, currently 21.88, and out of the narrowing range formed from over May to June, and in what had effectively become a descending triangle, morphing possibly into a bullish halfway hesitation. This move led to a higher action over the combination of the May high at 22.58 and the October 2018 high at 22.62. Now, whilst I was away, the market had started to make some contradictory actions day after day, usually indicative of pretty heavy indecision. However, this indecision had been channeled into a possible ascending triangle formed over July. The lower trend line, currently 23.13, is formed from the very recent uptrend, and the upper trend line, currently 23.36, is the late June to date downtrend. As you can see, prices are quite close, and we do come to a cusp this week. Thus, yesterday looked like a break from this pattern. However, today's action indicates that it was a false break lower, and that the ascending triangle is still active. However, before I start looking at targets for this pattern, it's best to look at some earlier possible patterns that have developed over July. Back in June, I laid out my thoughts on the action from mid-April being a possible, very large bull flag stroke halfway hesitation. I thought, and still do think, this has a lot of merit. Thus, I placed the target X1 in the 23.71 area to give a conservative target for such a pattern. This pattern is still alive, as is target X1. I've also mentioned back in June, and I think even earlier as well, another possible pattern. The second idea was for a cup with handle pattern. You see, the action over late February, even until now, still looks promising and suitable for such a pattern. I was worried about the excessive height and wide action. However, I was confident enough then to place a potential target X in the 23.51 area. I still stand by that analysis. So those are the opportunities on the upside. Finally, the very recent descending triangle pattern. It was broken in between my commentary, so I could not give an idea of A, which way was the move, and B, how much it should move by, because the measurement had to be taken from the break in the trend line. I could only confirm this bullish move last time with a potential topside target in the 22.75 area, an area that had already been reached. This sometimes happens when a move is so fast that it helps, but it helps the other patterns as well to know that the first target on the upside, the one for that descending triangle, has already been reached. Nevertheless, whilst I currently cannot give a target in either direction for the ascending triangle, I can give an idea of the size of the move should and when it happens. Move up would be in the order of about $75 on top of the breakout value of the downtrend when it is broken. A move down would be about $45 under the value of the breakout value of the uptrend when that is broken. So watch and see. LME 3-month tin. The original bullish incentive here is still alive and strong. It still thrives. The original move back up, which started some 19 weeks ago, translated to a higher level some 12 weeks ago when prices moved up over the middle tine, currently 31,655, and reached up towards the upper tine above, currently at 34,035 of the January to March bullish shift pitchfork. Prices most recently reached the upper tine on Friday and then came off a bit yesterday. This had all tied in nicely with a point I made 10 weeks ago by looking at the November 2020 to late February 2021 action as one leg of a type of bullish halfway hesitation. We then had a target in the 31,250 area. You can see the market reached that target 5 weeks ago and indeed overshot it. It is from this overshoot that a troublesome weekly key reversal down was generated at the same time. Additionally, overhead resistances, which started to accumulate above the market from 32,100 onwards, helped I'm sure to tip the market over. However, despite this weekly key reversal down, we were, still are, within and nicely within the same bullish shift pitchfork has managed to move prices up from the 23,000 area back in March up to where we are now. Until this pitchfork is broken or amended, then it will still govern the bullish incentive. Now, please remember this. This current move up punched up and through a stratified area of resistance between 32,100 to 32,985 with another layer at 33,475. As at this moment, it seems the market has dealt with all those layers of stratified resistances. There's only one level left, the April 2011 all-time high at 33,600. Confirmed consecutive closes over that and we may be looking higher still. In which case, taking the liberty of posting some projected near-term Fibonacci levels to look at. Now we're over the 50% projected Fibonacci level at 33,145, but we still have the 100% projected Fibonacci level overhead at 34,400. Of course, the bullish pitchfork is still the one thing this market has to deal with, and the upper tine is the capping yet bullish action. Keep watching that. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.